Hi guys, it's Ian and this is your weekly roundup video. It is Saturday the 26th of April 2025. A relatively quiet week last week, particularly in the way of financial data releases. So news moves markets, as we know, and we had a pretty light docket throughout last week. What has happened is that we've seen consolidation. We'll talk about that when we get to the chart. So DXY, which is the dollar index, actually closed the week little net change. Now, sometimes when we get consolidation, it can highlight a potential change in the long-term bias, and that's one thing that I want to concentrate on today with, again, a focus on DXY, the US dollar. Now, next week is a busy docket for data releases. Just having a look at the calendar. Monday's pretty light. Probably see consolidation again throughout that period, or at least continued sentiment. And then going into Wednesday, quite busy for the Australian dollar. We've got consumer price index overnight, 2:30 UK time. Then we've got some Chinese data. We've got the Eurozone GDP, gross domestic product, can be a market mover. Also, that's from Germany, then the retail sales. So on Wednesday, basically the focus being on the Australian dollar and the euro. And then going into Wednesday afternoon, we've got inflation data, core personal consumption expenditure. And then into Thursday, the main thing overnight, we've got the Bank of Japan interest rate decision. And then we've got their press conference, which I can focus on because it's at 7:30 UK time. That is going to be quite important. Then we've got ISM manufacturing data. Big focus on US manufacturing data at the moment, obviously with Trump's policies. So I think that'll be closely watched. Expecting a print of 47.9. Remember, anything under 50 really highlights that we're in a bit of a downturn. Anything above 50 is quite positive. Then on Friday, Australian retail sales overnight, and then we've got the Eurozone consumer price data, which again will be watched and traded upon. And then the biggie next week is obviously the non-farm payroll, which comes in on Friday at 1:30 UK time, first Friday of the month. Always a focus for traders. I think that the moves might already be established by Friday, but we'll wait and see. I can't see that we consolidate until Friday from the charts that I'm watching. So, but never say never in this market. Let's get to the charts. So the first chart, as always, that I want to concentrate on is DXY. I'm then going to go through the majors, and then I'm going to finish with the NASDAQ, because that's potentially forming quite an interesting pattern. Obviously, we'll cover gold. It's a focus for a lot of retail traders, but let's get to the chart. So this is the chart that I want to concentrate on, so DXY. Just to explain what we've got: monthly chart, middle bottom, then moving left, we've got the weekly, daily, 8 hour, hourly. Well, that's actually 4 hours at the top there, and then the hourly chart. These are what I call naked charts. If I press this button, they then are dressed, if you like. Those are the indicators that I focus on. And I suppose this is the chart that's dominant for last week. Okay, we did make new swing lows, so smart money concept traders will probably say that it went lower, took out, or with Wyckoff traders as well, pushed lower, took out loose stop losses, and then moved again to the upside. What I think is most interesting is the fact that we opened and closed near the same point, and that is called a doji style candle. Would have preferred a smaller body, but it highlights indecision at current levels, and that's basically what a doji style candle does. If you get a high close next week, then that doji candle becomes something else. It becomes a morning doji star formation, and the morning doji star formation is seen at the base of a trend and the start of a new upward bias. So evening doji star at the top, morning doji star at the bottom, and I'd say that we probably need to get a move up towards this sort of area. So we've got a previous swing low from the week 31st of March, located at 100.88. That's also close to a Marabuzo from this week. So this strong downward pressure on the week April 7th, that's a strong bearish candle. The midpoint is often an attraction for traders. So that's lining up very close to this previous swing high. That in turn will then highlight a morning doji star pattern and could potentially say that we're in a reversal trend. Elliott Wave formation would then say, well, this is 1, this is 2, 3, 4, we've completed 5, and then we're going to get a choppy move to the upside. And sometimes it's not as straight as just an ABC formation. If you cover Elliott Wave, it can have many different patterns with regards to the corrective formations. What I basically look for, because I trade cipher patterns, and that is another study, I look for these levels. Okay, so let's just put them all on. Cipher, and I look for patterns to develop in this corrective formation. So my minimum requirement would be up here around about 101.78, depending on where we stop for the first wave. So the first 0 to A or A to B will then dictate how much of the correction folds out, because that then becomes, struggling with this morning, that then becomes a different pattern. Okay, so if it's here, it'll end up there. If it's here, it'll end up there. So it's very important where this first leg finishes, and obviously at the moment it's far too early to tell. So just to talk about what I've highlighted in the DXY, let's go to the 1 hour chart, and this is another reason why I believe we're forming a base. Let's just get rid of the RSI. Okay, so very important time frame analysis. So the big picture analysis highlights that we've got the potential of a trend reversal. Okay, we then want to go down into shorter time frames. The shorter time frames then can highlight a reversal pattern. Obviously, if we're looking for the end of a trend, at the end of a medium term trend, then we want a bullish reversal pattern, okay, in a shorter time frame, just to say to us, right, the trend is finished and now you can start moving to the upside. Why is it important? It's important because we then know where to put our stop losses. Okay, we can't enter a trade, especially a swing trade, without a defined entry, a defined stop, and a defined target. And cipher pattern analysis offers you that. Okay, it's the art of finding patterns, cipher patterns that are based around Fibonacci levels, which can highlight, again, nothing is 100% in trading, but it gives you a bias, so it can highlight that the base is in place. And on this 1 hour chart, we've got a bat formation building. And what I have, the way that I use these formations is not necessarily to trade DXY, although I am effectively trading DXY, is to overlay that, use correlation onto other products. So I've got a negative bias, immediate negative bias in DXY, because I believe we're moving lower within the CD leg of this bat formation. But over the medium term, I want to be bullish. And because I've got a negative bias in DXY at the moment, I'm looking for shorts in the US dollar. And at the moment, personally, I'm short in dollar Swiss because that was the best setup. So I hope that sort of makes sense. So big picture analysis, DXY, we've got that indecisive doji style candle. What's it making on a shorter time frame? Well, for me, it's making a back formation. What does it say? Well, I've got 5 waves up. So again, using Elliott Wave as an overlay, what we want to see is the completion of 5 waves down, and then we want to flip in the wave pattern. So 5 waves down, I don't want a corrective wave up, and then went 5 waves up on a shorter time frame, and that's what I can see here. So wave 1, wave 2, wave 3, wave 4, wave 5, and that dictates that the next move lower should be corrective, again inverted on that weekly outlook. So the next move lower should be an A, B, C, D formation, and what I like to see is a cipher pattern confirming that. So at the moment, I believe we're moving lower within this CD leg of the back formation. That will complete close to 97.75. What can I then do if I'm looking at a swing trade for a dollar cross, euro dollar, sterling dollar, dollar Swiss, Aussie dollar, all these different dollar crosses? Well, I can then place my entry there. I'm not even going to talk about the take profit yet, and I can place my stop loss there. So I've got my entry and I've got my stop loss defined. This, if it's a swing trade, can keep going higher and higher and higher, and this, which is your risk reward factor down here, can get bigger and bigger and bigger. So when we're trying to find a potential medium term swing bottom, it's important that we've got these different time frames that overlay, and I hope I've made that clear. So just to talk about DXY, 5 waves down, medium term, potential of a flip here in sentiment with regards to the 1 hour chart. At the moment, the bias is still bearish, but I get towards 97.75, I want to be getting out of dollar shorts, and I want to be considering dollar longs, and I then want to ride this medium term trend back to the upside. So let's get to the dollar products. Okay, the first one I want to talk about is dollar Swiss. Okay, so I'm going to move this down to 60-minute chart. What happens a lot with with the end of an Elliott Wave formation is we'll get a wedge pattern, or we'll get a head and shoulders formation. So bearish head and shoulder formation, obviously at the top of a bullish wave count, reverse head and shoulders at the base of a wave count. What we often see as well in a negative wave count is an ending wedge pattern. So this was the dollar product that I saw that added value on Friday. So looking at DXY, I want to be shorter dollars. Looking at dollar Swiss, I complete 5 waves, 1, 2, 3, 4, 5. I'm now expecting a move to the downside. Different factors can give you more strength in your analysis. Okay, here I've got the ending wedge pattern, so that then adds to the strength of the bearish sentiment. What we did see is we saw a breakout of the previous high. Okay, what can happen? This can be known as a fake out high when we're looking at these breakouts. So, you know, system trading or people that look for breakouts, this is the previous swing high. We then break it, but then we come back inside, and when we come back inside, that basically highlights that yesterday's high, as I've highlighted here, that move to the upside was fake. Okay, so it's basically grabbed liquidity. It's probably taken out a few stop losses. Wyckoffs could say that whole period was a distribution zone. That would dictate that you go higher, take out liquidity, stop losses, move back lower. What will often happen, and what gives you prime short entry, or gave me a prime short entry, is this level then becomes pivotal. Okay, so 83.11 was the daily high. It then breaks lower, comes back, tests that, and then moves to the downside. What else do I have on here? Well, I've got a fib level. So the wedge target is 81.98. I then project that to the support level, okay, and I get 81.97. So I then saying, well, that's 5 waves to the downside. So why is it important to do all this overlay analysis? It's important because, again, I know where my entry is, I know where my stop loss is because it's above the swing high, and I then know where my target is. So it's given me a nice risk reward factor of 3.75. Also, sometimes when we get down to the sort of the fourth wave, so wave 1, wave 2, wave 3, wave 4, sometimes, and not in this case I don't believe, we'll get a retest of that wedge breakout, okay, the fourth wave before we move lower. So I've got the dollar giving me that bias, and I've also got this product giving me that bias. What could possibly happen, or what could possibly happen, is that we see this instead. So we just see a move lower, because obviously 5 waves, 3 waves down, but the move lower could be aggressive. If we're looking at DXY, DXY has got all that way to move down to that 88.6% fib, and there is scope that we could see quite an aggressive move lower in this pair. And then obviously this sentiment, or this risk reward factor, then increases as we move lower. So that's dollar Swiss. That was my focus on Friday. Let's go through the other products. And again, what have we seen here? So this is euro dollar. I'm going to put the big picture on to start with, which is 240 as far as I'm concerned here. And I've got a bespoke support level. So these are support levels that I developed years ago, and when they collide, they often add weight to the support or resistance zone. So there was one on dollar Swiss, it was a single resistance level. This is actually a double. So what I like to do when I see wave patterns, Elliott Wave patterns, 261.8% back formations, cipher patterns, I like them to collide with these support or resistance levels. It's something quite unique, but what we do have is we've got a 261.8% extension level located at 108.91, and we've got my bespoke support level located at 108.91. What have we got at the moment? Now, if we go to the daily chart, engulfing outside candles highlight a change in sentiment. So if you're moving to the upside and you get a big bearish engulfing candle, that will say, right, the bias is flipped to the downside. On the daily chart, don't look at 5-minute charts. Big time frame analysis overlays on the smaller time frame analysis. So the weekly chart, daily chart gives a big bearish engulfing candle. What's the opposite? The opposite is an inside candle. So an inside candle highlights indecision. It basically says the market's going nowhere. Do I want to trade an inside candle? No, I don't. Okay, I want to see breakouts. I want to see changes in sentiment. So all we've got here, and it really is quite mixed, is for the sort of last nearly 2 weeks, we've seen sideways movement in euro against the US dollar. We've got 2 inside days on Thursday and Friday, and that just highlights indecision. It's like a doji style candle. You need more confirmation. So those candles, to me alone, are basically saying, be wary. What can happen in the euro against the US dollar? Well, using DXY as the overlay, DXY gives us a bearish bias. So there's ample scope for us to just hold within this sort of range, which is the 115.74 swing high to this swing low, which was around about 113.09. So big picture analysis then gets overlaid into small picture analysis, easy for me to say. And we're just seeing this consolidation. Okay, let's just overlay. Let's get this dressed, if you like. Go back to that, sorry. So it then gives me sort of a bit better picture. So I've got a supply zone at 114.86. What people will probably be seeing at the moment is just this. Okay, so they're just seeing this consolidation, which is caused by that, or by those inside bars, and they'll say, well, that's a triangle formation, or that's a flag or a pennant. Okay, so that's got a bias to break to the downside, and then they can either preempt it, so they get short at current levels, and then basically what happens is, in this wave 2, we move higher. So we go, excuse me, it's not clicking on properly, so we go like this basically, okay, up towards the supply zone. So it's important that you're looking at correlated products. It's important that you're looking at DXY to try and get a big picture analysis. Do I want to trade inside bars? No, I don't. I want to trade it when it gets up towards this sort of level. Now, there's nothing to say that this doesn't break to the upside. It depends how it correlates with that DXY. But what I do like, I like the fact that this wave pattern comes into play towards my my support level. So at the moment, to play the dollar, I'm short dollar Swiss. When it gets up here, we get a flip in sentiment with the dollar. Then when I flip that sentiment, I'm then looking to potentially short euro dollar, but it's very important that it doesn't take the swing high out, which was at 115.73, because if it does, all of this analysis just gets negated. Okay, gets thrown out the window, and we have to start again. But it's important that we plan the trade, and then we trade the plan. So going back to other products, just have a drink of coffee. Okay, again, mirroring the DXY, sterling dollar long-term picture, let's just get rid of that, is bearish. At the moment, inside days, we're just moving higher. It's a mirror image, really, of sterling dollar. We've got a supply zone located at 133.95. That's going to be my focus next week. Again, if we break the swing high, this just gets negated, and we have to reanalyze that product. But at the moment, I think we'll just stay inside this range, get chopped around a bit for probably Monday, Tuesday, and then put in potential tops. Dollar Swiss we've covered. Dollar yen I quite like. I'm going to take it down to 60. Didn't perform as I expected on Friday. This was one of my resistance levels. It's a single, so it's not that strong. Saw this wedge formation. What I don't really have 5 waves. Okay, so this just looks like a wind up, and I'm focusing on this sort of head and shoulders pattern. So again, what can happen inside the wedge formation is that we get these reversal overlays, if you like, so a bit more power in the analysis. What I wanted to see is a move down to here, so that I could then get this formation in place. What I have seen is only a minor correction at the moment. So again, just to talk about sort of how I like to get into trades, is I like to trade this. I like to trade the completion of the second wave. And again, just talking about risk reward, the reason I like to trade the second wave, and the only way that I've found that I can trade personally, is because then I get a defined stop, defined target, defined entry. So it's all coming back to risk reward. And the reason why it's so important for me, especially after sort of all these years of trading, and I've been in the market a long time now, is because it takes fear and greed out of my trade setups. Okay, there's still a bit of fear and there's still a bit of greed when we put any trade on, but I know that I can't move my stop loss. I know that I can't move my target, because I've planned this trade, and I know where the entry is, and I know where the stop is, and I know where the target is. And for swing trading, that's the most important thing. So at the moment, mildly bearish, but definitely not seeing the second wave yet. And also, when we talk about NASDAQ in a second, that looks quite bearish. I'm going to move through these quite quickly. We could see a higher correction. I'm even going to call it a higher correction in Aussie dollar towards this sort of zone 64.68. Remember, we've got that data from Australia at the beginning of the week. I've put 5 waves in here. Why have I put 5 waves in here? Because often this CD leg is in a 5-wave count. And basically, if you want to trade it, then let's just move that down. So then you want to be getting into the second leg. So basically, it rejects this trend of lower highs. Then I want to signal around here again, entry, stop, target. But it isn't going against DXY, but I don't think it's as good a setup as dollar Swiss. New Zealand dollar consolidating. So what's happening, like the other dollar majors, instead of inside days, we're seeing this large triangle formation on a breakout to the upside. Trendline resistance currently located at 59.92. Measured move target is up here. Could sort of say it's a sign for pattern, but it's a bit too disjointed for me. So it would look like something like that, and then highlight and move to the downside. What I do sometimes like when we get these patterns, I'm just going to move this off so it doesn't get too complicated, is again we can get an overlay. So this then becomes left shoulder, this area becomes your neckline, this becomes your head. Okay, and then we move like this. We have this sort of prolonged period of consolidation, but with potential sort of intraday setups, if you like. Dollar CAD, and I do like this one. Big picture analysis is for a move to the upside, so all the way up here, sort of 114.41, completing a 5-wave count. But we're looking at an intraday chart at the moment. This is a 1-hour chart, so it hit my 50 fib. So basically, what does that say? And again, I want to be completing. Well, I want to be trading either the completion of these patterns, or I want to be trading the CD leg to the downside. And what it basically says to me is that we're going to make this. Okay, so let's move you over there. So this being the swing high, this consolidation period, just chopping up day traders basically, then goes low. Looks like it potentially is going to take out the swing high, but it completes the back pattern around about 137.95 and then moves to the upside. Gold correlated with DXY, so when DXY moves lower, what will normally happen is that gold will move to the upside. Got numerous questions about this on Friday. Again, not really a setup. I can see impulsive move to the downside. This looks corrective, it's in 3 waves. The move lower is in 3 waves, highlights corrective. Normally when we see 1, 2, 3 and 1, 2, 3, the next one will be 5. So it's sort of trying to, again, trying to pick or force picking tops and bottoms can be quite dangerous, but we need to wait until we've got this little swing high in place to then potentially highlight a bigger picture. And we sort of go for this sort of pattern. But at the moment, DXY moving to the downside gives it a bullish bias into next week if you have to trade it. And like I said, I'm looking at 60 different products. I'm trying to pick the best one or the best 2. I'm not trading numerous different assets. So let's just finish off on NASDAQ's gone massively over time today. Where are you? There we are. Okay. So here, I think we're potentially finishing with an ending wedge pattern. So I'm going to highlight this indicator. This is called a trend predator indicator. Breakout continuation on Friday. So what has a tendency to happen is we either break out and we hold out, or we break out and we move back in. or we move sideways. So 3 different scenarios. What we had here was a breakout to the upside, but we've got warning signals of a potential return in a potential reverse in sentiment, and that's this wedge formation. I've got some resistance located at 19645. So what would I look for if I was trading this? Would I sell at 19645? No, it's just a resistance level. Just because it's a resistance level doesn't mean it's gonna hold. Tempting, but foolish. And the reason why it's foolish is because I don't know where to place my stop, because I haven't had a second wave. Okay, what I want to see is a move up, then a fake out high. So it basically says this will be Friday's high. Okay, so that will be Friday's high. So basically moving to the upside, then breaking lower to say yes, I'm a fake out high, and then forming this head and shoulders pattern. So we're going back to this. So head, left shoulder, getting in the neckline here, moving up to form the head. I can't predict where this is going to be yet because I haven't predicted a swing high. And then looking for this. The measured move target is 18495. Again, what do I want to see? I want to see 5 waves, because I want to trade wave 2, because then I know my entry, my stop, my target. The most important thing in trading. Let's just put a fib on there, saying that this is a potential high. Okay, and then we can start forecasting lows. That happened quite too easily. So potential swing low, then a retest. Remember what we said before. So move higher, take out the high, move low, break out, fake out high, then retest of the wedge formation, and the impulsive move to the downside, which again takes out all these stop losses that are underneath the neckline. That's why it's normally impulsive. And then a bit of consolidation where people say, well, I'm not quite sure about this trend, and then the last blast lower to 18,495 to complete the sequence. So as I said, I've gone over, well, doubled the normal time this week. A lot to talk about. So DXY, continuation trend to the downside, but potential flip higher. We talked about all the different setups in different dollar products. Gold, ABC formation to the upside. NASDAQ potentially reversing at 19645, but looking to trade the second wave. Okay, I hope that all makes sense. I hope it's not too complicated. Good luck in your trading this week, and I'll see you next week.